It hurts, but thanks for having me on. It hurts, but I'm not getting emotional. That's the worst thing you can do at a time like this. I go back and I look at what the facts are, and Google had a very good quarter, but I think it was up more because of the split. To be honest, it wasn't a perfect quarter. It was good. It was good. Don't get me wrong, but I have said that I made money in Google and I took a profit and I put it into Facebook and Meta, and obviously that was not the right timing. But I don't think this company is down and out. It's down, but I don't think it's out. Now, let's just talk about the quarter for half of a second, because there were some good things in the quarter that no one's really talking about. The fourth quarter, total revenue up 20% year over year, ad revenues up 21%. Yes, they had some slight misses in DAUs, daily active users, monthly active users, but they were almost in line. They were pretty darn close. The big surprise, by the way, they had a stronger ARPU as well. The disappointment was operating income, a 5% miss, a shock, right? That's obviously negative. And then, of course, the guide was also negative, the 3 to 11% total revenues for 1Q versus 15% expectations. Should the stock be down on that? Absolutely, it should be down. Should it be down 24%? No. It should be down about 8 to 10%, in my opinion. We know the reasons why. A lot of companies are going through these iOS changes and getting impacted. There is inflation. There is competition, especially TikTok. I think that Zuckerberg mentioned TikTok 6 times on the conference call yesterday. So they're going after TikTok, and they have an answer, and that's the important part. They're already seeing a mix shift to Reels, and they are going to focus on growing that and improving engagement. Oh, by the way, on the positive side on guidance, they did lower expenses, and CapEx is in line. And both of those two items are important because they're very volatile. So company understands what they have to do. On the call, they talked about 7 different investment priorities. Reels growth is the number one, and they have pivoted before in the past. We saw it with mobile feed. We saw it with stories. It took 6 to 9 months for them to monetize stories. I expect the same here with Reels, but I think they'll get it. And in the meantime, if we step back, they've got 10 million plus advertisers. The return on investment in digital advertising is still strong, and Facebook has workarounds with regards to iOS changes. It's going to take time, but they've got workarounds. And as I mentioned, DAUs were 1.93 billion in the past quarter, and monthly active users were 2.9 billion. And those are real numbers, Dom. Lastly, Jenny touched on it, free cash flow, $38 billion in 2021. In the fourth quarter, cash flow came in 13% better than expected. Trades at 7 times EBITDA. It's not going to go right back up. Obviously, it's a show-me story, but I think give it a quarter or two, and I think the stock can work from here.